An Islamic bank is a type of financial institution that aims to apply Islamic economic and financial concepts to the banking industry. So, a banking practice that adheres to Islamic law, and encourages profit sharing in the management of banking operations and forbids the payment and receipt of interest. So basically, Islamic banking is a form of banking that complies with Sharia or Islamic law, Islamic finance, which has a focus on sharing in profits and losses. The first wave of Covid-19 cases in Malaysia were successfully treated in less than 2 months, and the country reported 2 waves of cases up till April 14, 2020. The second wave struck early in March 2020, bringing with it disturbing circumstances. And by February 27, 2020, the initial wave had been successfully treated, and all 22 previously documented cases had been let go from the hospital. On March 4, 2020, there was a sharp and significant increase in the number of positive cases compared to the slightly lower number the day before, and the number of critical cases in the intensive care unit ICU increased daily, which is the first 2 critical cases were noted on March 9, 2020. The first Islamic banking system was founded in Malaysia in 1963 by the Pilgrims Management and Fund Board, or Perbadanan Wan Simpanan Bakal-Bakal Haji. The Malaysian government created a thorough process appropriately introduced an Islamic banking system among Malaysians. The familiarization phase, during which Bank Islam Malaysia Berhad was established, lasts from 1983 to 1992. So the government allows foreign Islamic banks the opportunity to operate in our country by issuing them a license. Islamic banking in Malaysia was established by a single reputable Islamic bank that had an enviable monopoly position free from market demands. So next, I will explain the effects of Covid-19 towards Islamic banking. The first one is moratorium self-benefits for bank loans borrowers. The second one is special tax treatment on the moratorium interest profit. The last one is special relief funds for SMEs customers. For moratorium self-benefits for bank loans borrowers, Malaysian banks automatically granted a 6-month moratorium on all financing repayments made by individuals or SMEs, apart from credit card balances, for example, effective from 1st April 2020 to the end of September 2020. So a borrower is not required to make monthly loan repayments to the banks during this moratorium period. But given that this move benefited roughly 70% of all financing for the Islamic banking sector, that it was anticipated that the moratorium would give Islamic banks a reprieve. So in order to explain the embargo on Islamic hire, buy, and Islamic fixed rate financing programs, they began contacting their consumers. For example, Bank Rakyat, the biggest Islamic cooperative bank in Malaysia, has granted its client an 6 billion ringgit repayment moratorium. So the bank has about 900,000 stockholders. 70% of them are in the B40 family income category. And in Malaysia, the B40 category represents the bottom 40% of income earners. For special tax treatment on the moratorium interest or profit, the Prime Minister extended the loan moratorium for people who lost their jobs and income due to the pandemic by another 3 months to December 2020 on July 29. Focus on clients from the sectors that have been struck particularly hard, such as travel, tourism, and hospitality. Even though debtors are not compelled to make payments to banks during the moratorium period, financial institutions nonetheless earn interest income. So in order to decrease the impact on banks' cash flow, the government has therefore offered the unique tax treatment on the moratorium interest by taxing the interest on a receipt basis. So with this tax break, banks are essentially permitted to postpone the taxability of interest revenue from these loans until they have collected it from clients. For special relief funds for SMEs customers, Malaysian government through BNM has taken action to ensure their survival during these trying times and to lessen the impact of these outbreaks' cascading effects, especially considering the limitations placed on their ability to operate during the MCO, which lasted for months. Commercial banks, Islamic banks, and development financial institutions overseen by BNM are the channels via which interested SMEs that can seek for financial aid from the banks, totaling billions of ringgits. So the Special Relief Fund is the most significant BNM program for Malaysian SMEs that affected by COVID-19. And the objective of this fund is to assist in resolving immediate cash flow concerns so that SMEs may continue to operate in the market and save employee jobs. So for this project, the government has set aside 5 billion ringgit with a reduced interest rate of 3.5% over 5.5 years and a 6-month repayment moratorium. The initiative planned by the government in developing financial institutions during the pandemic is the government and BNM has collaborated to give an emergency assistance program and other forms of aid. Special Relief Fund, established to help alleviate the short-term cash flow issues faced by small and medium enterprise (SMEs), and a 6-month moratorium on financing repayment. So social protection measures are necessary to help underprivileged Malaysians weather the current economic storm and thrive in a new post-pandemic environment. So according to Mustafa Mohamad of the Prime Minister's Department Economy, the banking sector must work with the government to foster economic recovery. So the government and financial institutions would try their utmost to facilitate finance for businesses, including small to medium enterprises. So the government needs to invest more in talent and human resources, upskill its workers, and keep doing so. The implementation of COVID-19 effect mitigation measures in the monetary policy was met with a similar response from financial institutions in Malaysia. It is apparent that a lot of parties have expressed worry about the current scenario. Individuals, NGOs, and businesses like banks have highlighted how it has helped them feel a sense of shared responsibility for society during a trying period. The Maqasid Syariah has been realized in protecting the Ummah's interests through the aid provided by society to society. The 5 pillars of human life, which are religion, life, intellect, dignity, and wealth, as well as their protection, were explained by the degree of necessity. So it is possible that Malaysia's economy would see a severe contraction which will raise unemployment and cause poverty.